Welcome back to Morning Trade Live. Time to go inside out on NVIDIA. All right, Matt Tuttle is with us, CEO and CIO, Tuttle Capital Management. I'm glad you're with us. I mean, we're going to be watching for NVIDIA's earnings. In the meantime, I have to just say it once again, the NASDAQ 100, new record high today. The S&P and the Dow also at record all-time highs today. We're in an environment where the path of least resistance has been to the upside. At the same time, you say, and I'd like you to explain, no margin for error when it comes to the NVIDIA earnings. Tell me what you're watching here.
Yeah, I mean, NVIDIA, to me, if you're an intermediate term, longer term investor, it's a must own. But they're at all-time highs here. They pretty much are the market. They're the biggest holding in the S&P 500, the NASDAQ 100. And everybody is expecting a blowout quarter. They've got to deliver that and then some. I mean, they can. Again, it's a stock you've got to own. I'm just not sure you get a whole ton of alpha from it. I think there are other areas you also need to be looking at as well.
Understood. I mean, when you see it at 178, is there a time that you would say it's a screaming buy? I mean, for example, if it pulls back after the earnings because something is less than perfect, do you say buy?
Anytime you get a meaningful dip in NVIDIA, that is just a gift. So yeah, I mean, if I saw I own it. We also have NVDX, which is 2x NVIDIA. Anytime I see a meaningful dip in NVIDIA, I would be buying hand over fist. I don't like buying something that's just making new highs day after day after day, especially ahead of a massively important earnings report.
Yeah, understood. When we look at AMD, and of course we know 15% of the revenues of chips sold to China now, it's been agreed upon by these companies. They'll give that to the U.S. government, the administration. I mean, that's something sort of new. But tell me about AMD. Is AMD a really formidable player? Is it, in fact, eating into NVIDIA's market share at all?
They may start to do that. I mean, I can't believe I'm actually saying it. I avoided AMD for a long time. We actually had it as a stock of the day in our newsletter one day last week. I don't think AMD is a must own. I think AMD is a should own. And the other stock I just bought 2 days ago, which I never thought I would say this, is Intel. And we made that the stock of the day in today's newsletter. So, there's some other semis you may want to look at.
No way. You got Intel a couple of days ago. What are you, on the line with President Trump? That's unbelievable. That was a good call.
Well,
what made you want to buy? But hold on. I mean, you knew the CEO went to Washington. He was under fire, under the microscope by, obviously, the administration. The stock has been one that was beloved by shareholders, so many that kept sticking around despite the punches. What made you like Intel at this time this week? What made you like it?
Unusual options activity. Somebody always knows, especially in this administration. You'll find that a lot of times before an announcement is made, there's just some strange trading in the short dated options. We saw that. I took a flyer on it, and so far so good.
So that's the trader's mentality, and kudos to you for being aware and seeing that activity. That's obviously monumental and extremely valuable and useful. That does not say to me that Intel has had incredible management. Their agenda's looking great. I love them fundamentally. You're not saying any of those things.
No.
Are you going to get out now after the jump? You dumping out?
What is interesting to me, we've been laser focused on a theme I call Trump's Inner Circle, and we're launching an ETF on it in October. And one of the pieces of that is you want to look at, what the government is doing, what they're announcing. If they want to take a stake in Intel, then I want to be there right along with them. So I want to see how this plays out before I decide to take my money and run.
I see. Okay. But the final on NVIDIA and AMD, they're both buys in your mind, particularly on pullbacks. Is that the final, Matt?
Definitely.
All right. Matt Tuttle, CEO, CIO, Tuttle Capital Management. Good to see you. Thanks. Time to trade it. That's why we have Tom White, host of Fast Market here, and he has some example trades for us. So let's start with your bullish example trade on Nvidia. It's at 178 today. Good morning, Tom.
Yeah, good morning, Nicole. Pulling back from those all-time highs that we saw earlier this week. It still had a great run so far this year. Now, you got to keep in mind that they report earnings on the 27th, right? So that's going to be maybe a potential catalyst. But if you think this stock, this pullback might give you that opportunity to get in if you've been waiting for it to kind of pull back, because there haven't been too many pullbacks since those April lows. So I looked at a strategy that implied volatility levels relatively low, even though we've got earnings event coming up, and that's because of the parabolic move that we've seen in the overall market and Nvidia. So I looked at a strategy that's not a pure earnings play. It gives myself a little bit of duration, about 5 weeks in this position. I went out to the September monthly options, so 35 days to expiration on this one. We're going to buy that slightly out of the money 180 strike call in September, and then against it, to offset some of the cost and risk on this position, we're going to sell the 195 strike call. So bullish, $15 wide call vertical. You're going to pay roughly, I've got 620 debit on there. That's where it was trading earlier. It's probably trading closer to 5.5 right now. So you can get it a little bit cheaper here. But if you pay that 620 debit, it takes your break even to 186.20 over the next basically 5 weeks here. That's only about 3.5% above the current share price in Nvidia. So you don't need that massive move to the upside just to grind higher. And that 195 strike, that's still only about 8.5% above the current share price. So expectations going into the earnings report are expecting a bigger move than that also. So you've got duration on this one, low volatility environment, risking about 620 to make a potential 880 on this. But like I said, you can probably get it cheaper right now, around $5.5 debit for this. But you definitely need to move to the upside on this one over the next month. And, you know, even if you don't get that move on earnings, you still have duration on this particular trade.
Understood. How about a more neutral type of example trade, Tom? How would you go about that, please?
Well, like I said, Nicole, a lot of people feel like maybe they've missed this if they're not involved in Nvidia. So I looked at another strategy, and I went out to the August 29th weekly cycle. So this is the earnings week. So implied volatility levels in that option series are really elevated because of that event risk of earnings. So I looked at a cash secured put, and this allows you to collect a pretty hefty option premium, or if the stock does continue to fall below the strike that you sell, you might be able to buy the shares at a discount to where it's currently trading. So going out to the August 29th weekly cycle, I looked at selling the 170 strike put. Naked short put, cash secured put is what we call this. You're collecting roughly, I've got a $3 credit on there. It's trading closer to $4 right now because the stock has moved lower this morning. But the credit that you collect is what you can make on this trade. So if you collect the $3 credit, you can make $300. If you collect $4 credit, you can make $400. But if you collect that $3 credit, it takes your break even all the way down to 167 over the next 14 days. So if the stock does fall below 170 into expiration, you get assigned on those puts, you're buying, in essence, buying the shares at $167. That's about 7% below the current share price in there. So this is one of those twofold type of trades. You either just want to keep that credit that you collect on it if the stock stays above 170, or you're willing to buy the shares if it falls below 170 and you're still short the put, that you're going to get to buy those shares at a steep 7% discount to where it's currently trading today.
Okay, you know, Tom White, we thank you, always giving us these example trades every morning on Morning Trade Live. A good look there at NVIDIA.